This year I'm studying stock sectors. Disclaimer, this is not an endorsement of Edward Jones. I'm not a fiduciary. I've been in an investment club for over 20 years. My emphasis is stock study. Follow me on Substack and LinkedIn for blog and video post updates. Here is the stock study schedule. Right now we're at the month of July and we're studying industrials. Here is the Edward Jones 2024 stock study for industrials. We see quite a few industrials. But first, before the stock study, the investment portfolio balance is $12,747. Cost basis, the dollar amount invested is $11,308. Total gain loss, in this case it's a gain of $1,439. Here is an update on the balance as of July the 10th, 2025. $12,824 with available to trade $30. I wanted to give you a view of the total gains and loss of my account. The last time I mentioned that my account was at around $2,800, so that means it's close to $13,000. This is as of July the 10th. So I did want to get you, and I want to show you the total gains and the losses, dollar-wise and percentage-wise. Alibaba has had a 29% increase, but I wanted to show you some other things too that really caught my eye. Bank of America had a 49% increase. BlackRock has had a 30% increase in value. Capital One has had a 110% increase. Citigroup has had an 82% increase. CrowdStrike has had a 117% increase. Gilead Science has had an 18% increase. ING Group has had a 48% increase. Kroger has had a 44% increase. Mastercard has had a 52% increase. And look at Nvidia. It has had a 595% increase, and there's still a $1,371 profit. I've sold at least $1,500 worth of Nvidia, and it's still worth, it's still a $1,300 profit. It's worth around $1,500 right now. Let me just see if I can just scooch over there. See, look it's worth $1,600. And the cost basis right now, according to my purchases, is $230. That's how much is invested. It's 12% of my portfolio, and it's worth around $1,600 right now. So pretty much, I consider this all profit for Nvidia. Occidental Petroleum, it's had a 8% decrease. ProLogis has had a 61% increase. Sherwin-Williams, 30% increase. Simon Properties, which is a real estate investment trust, 37% increase. Taiwan Semiconductor, 20% increase. 3M, a 72% increase. And Welltower is a 78% increase. So overall, today, my profits are at $1,500. I will be studying 3M, symbol MMM. That's currently in investing with Danielle portfolio. Canadian National Railway, symbol CNI. CSX Corporation, symbol CSX. Federal Express, symbol FDX, currently in investing with Danielle portfolio. Lockheed Martin, symbol LMT. Stanley Black & Decker, symbol SWK. And United Parcel Service, symbol UPS, currently in investing with Danielle portfolio. All right, here goes the stock study. 3M, symbol MMM. 3M provides diversified technology services in America, Asia Pacific, Europe, Middle East, Africa, and internationally. It operates through 3 segments: safety and industrial, transportation and electronics, and consumer. The company was founded in 1902 and is headquartered in St. Paul, Minnesota. The sector is industrials, and the industry is industrial conglomerates. The annual yield is 2.03%. Here is the chart. It looks like a dip. This chart is from June the 2nd, 2025, so it does look like there is a bit of a dip. It's gone as high as close to $225, and recently, it did go down as low as $75, and it is currently at $144. That dip was when they had a lawsuit going on. 52-week range, earnings per share, $8.02. Ratio, PE ratio is 17.76. The performance, we'll look at the 1 year. The 1 year is plus 42%, and the 10 year is plus 8.38%. Here's some information. MCT Business News. Study finds high forever chemical levels in some Georgia residents' blood. The Atlanta Journal-Constitution. And Benzinga, Citigroup maintains neutral on 3M, raises price target to $160. And let me just double check that price. It was $144. I don't know that I would consider it a buying opportunity right now, but it's a good stock. I understand the concept. Canadian National Railway, symbol CNI. Canadian National Railway Company, together with its subsidiaries, engages in rail, intermodal trucking, and related transportation businesses in Canada and the United States. This business provides railway services, which include equipment, custom brokerage services, transloading, and distribution. Canadian National Railway Company was incorporated in 1919 and is headquartered in Montreal, Canada. The sector is industrial. Industry is ground transportation. Dividend annualized yield, 2.54. The analyst ratings are neutral. You look at the stock chart, look at it at 2020 compared to now, 2025. So it has had some price increases. 52-week range. Based on the chart, I wouldn't necessarily consider this a buying opportunity right now, but I do understand the stock concept. 1-year return is negative 14. 10-year return is plus 68. I understand the concept. I don't necessarily have a problem with the stock, but it isn't necessarily low right now. So I typically like to buy low, sell high. The price when I pulled this up was $101. MT Newswire RBC trims target for CNREL to 161. So wait a minute. The last price I pulled up, it was $101, and they have the target price at 161. And then, so they are thinking, these different places are thinking the price is going to be more. And it maintains an outperform rating, which is another good sign. CN to invest $60 million in Minnesota to build capacity and power sustainable growth. This is CSX Corporation. When I pulled it up, the price was $32. CSX Corporation, together with its subsidiaries, provides rail-based freight transportation. CSX Corporation, together with its subsidiaries, provides rail-based freight transportation services in the United States and Canada. It operates in 2 segments, rail and trucking. They offer rail services. It has population centers in 26 states east of the Mississippi River, the District of Columbia, and the Canadian provinces of Ontario and Quebec, as well as owns and leases approximately 3,500 locomotives, and is headquartered in Jacksonville, Florida. Dividends, the annual yield is 1.58. The analyst ratings are neutral, 6.2 out of 10, so they are neutral. Now I'm looking at the valuation, which is the Trefis estimate. It states that the stock is overvalued. It is overvalued by 7.86%. It says that the stock should be priced at $30.07, and currently the stock, when I pulled it up, was $32. So it's saying that the price is more than it should be. Let's look at the stock chart. You can look at 1985 to what it is now. It's gone up, steadily up, and it is having a little bit of a dip, but the price is not considered, it's considered overvalued. As of June the 30th, 2025, earnings per share was $1.68. PE ratio, 19.45. Doesn't carry a lot of debt. We see the 52-week range. The 1-year return is negative 2.45, and the 10-year return, look at this, is plus 199. Anybody that bought this 10 years ago is doing pretty well. Looking at some of the news. Globe Newswire, CSS Corporation announces date for second quarter earnings. MT Newswire's BMO Capital adjusts target price on CSX to $36 from $35, maintains outperform rating. So even though that research says that it is overvalued, that is priced too high, BMO Capital adjusts the target price up. So, something to think about. Based on this chart, I wouldn't say it's a buy for me, but I certainly understand the company. If the price were to drop down, I would definitely consider it. Federal Express, symbol FDX. When I pulled it up earlier this month, it was priced at $227. Federal Express, together with its subsidiaries, provides transportation, e-commerce, business services in the United States and internationally. It operates through Federal Express, FedEx Express, FedEx Ground, FedEx Freight, FedEx Services segments. The FedEx Express segment offers transportation, small package ground delivery, and freight transportation. The company was founded in 1971 and is headquartered in Memphis, Tennessee. The dividend yield, 2.53%. The analyst ratings, bullish. They think it's a very good company. And look right here. Right now, the last price I pulled up was $227. And according to the Trefis estimate, it should be priced at $174. So it's considered undervalued by 20%. That's quite a bit. I mean, and look at the chart. It was up in the 300s. Now it's down in the 200s. I understand this company. I like this company, honestly. That's why I own some. Earnings per share, $16.87 per share. PE ratio is 13.47. Very fiscally responsible. The 1 year is down at 24% and the 10-year is plus 33. I mean, honestly, I wouldn't have a problem buying this now. I understand the company and the concept, and I have definitely used their services. And it's down 24% right now. Let's look at some of the news. MT Newswire update. FedEx resumes Israel operations. And Mellis adjusts price target on FedEx to $175 from $180. Next, I've heard about this company quite a bit. It's in the news. Lockheed Martin, symbol LMT. When I pulled it up, the price was $463. Lockheed Martin, an aerospace and defense company, engages in research, design, development, manufacture, integration, and sustainment of technology systems, products, and service worldwide. There's 4 segments: aeronauticals, missiles and fire control, rotary and mission systems, and space. Offers military and commercial helicopters, surface ships, sea and land-based missile defense, radar and laser, sea and air-based mission combat systems, cyber solutions, simulation and training solutions. Primarily serves the U.S. government and international customers, as well as foreign military sales contracted through the United States government. The company is formerly known as the Lockheed Martin Corporation and changed its name to Lockheed Martin Corporation in 1995. It was founded in 1912 and is based in Bethesda, Maryland. Yep, that where it's based doesn't surprise me. Making sure it's very close to Washington, D.C. The dividend yield is 2.88. Analyst rating is bullish. Valuation is considered undervalued by 12.28%. Analysts think that the stock, Lockheed Martin, should be valued at $520. And last I pulled it up, it was at $463. So it's considered undervalued by 12%. So here is the aeronauticals, represents 36%, missions, systems and training, 25.59%, space systems, 18%, missiles and fire control, 16%. That was as of April 2025. And I would imagine that it would be impacted quite a bit by government policy. Stanley Black & Decker, symbol SWK. You can see the chart here. Wow, this one has gone down. It was as high as $225. Now it's down to $67. When I see stuff like this, I'm thinking, wow, is this a buying opportunity? This would be something I would consider. I certainly am familiar with the company. Last priced at $67.75. when I pulled up the information, June 30th, 2025. The lower end of the 52-week range. PE ratio is 28.77, which to me is above 20, so it's a little bit high. Earnings per share, $2.36. 1-year return is down 15%. 10-year return is down 35%. Stanley Black & Decker taps COO Christopher Nelson as next CEO. So it seems like they're having some changes in staffing. They announced leadership transition plans. So they're in the midst of changing leadership. Black & Decker provides hand tools, power tools, outdoor products, and related accessories in the United States, Canada, other Americas, Europe, and Asia. The company's tool and outdoor segment offers cordless electrical power tools and equipment, including drills, wrenches, drivers, saws, concrete prep and placement tools. The company was formerly known as The Stanley Works and changed its name to Stanley Black & Decker in 2010. The company was founded in, that's 1843. Now, this company is really, it's been around a while, almost 200 years, and is headquartered in New Britain, Connecticut. The sector is industrials, machinery, dividends. Oh, look at the annual yield, 4.85%. That is a good annual yield. It's neutral. And the price is down. Earnings per share, the PE ratio, they're in the midst of change. This one is, I would consider buying this. United Parcel Services, symbol UPS. The price is down at $100. Look at how high it was. It was in the 200, now it's down to $100. The low end of the 52-week range. Earnings per share, $6.85. That's pretty good. PE ratio is 14.73. The 1-year yield is down 26%, and the 10-year is 4%. Goldman Sachs adjusts target price on United Parcel to $124. It maintains a buy rating. I have the company in my portfolio. All right, so UPS is a package delivery and logistic provider, offers transportation and delivery services. It operates through 2 segments, U.S. domestic package and international package. Founded in 1907 and is headquartered in Atlanta, Georgia. Sector, industrials, air freight and logistics. The dividends, oh my goodness, look at this dividend. Oh my goodness, 6.48% dividend yield. Oh my goodness, that's a good dividend. It's bullish, and it's undervalued by 22%. This is saying buy to me, definitely. Next time I purchase stuff, I may definitely consider getting more. Priced at $100, and they say that the price should actually be around $123. The division breakdown: domestic package 65%, international package 20%, supply chain and other businesses 13%. All right, everyone. So I did not make any purchases this time around. I just strictly did research. So let's look at some of the things that have been going on in the portfolio. I got some dividends from Nvidia. The price increases of Nvidia, it just keeps giving. I could do a whole segment on Nvidia. Starting off with $900, it goes up to $1,600. I sell $900 worth, it's $700 balance. Then it goes back up to over $2,000. And so then I sell about $600. Now it's gone up even more. It's probably going to go up even more again. It's just the gift that keeps giving. All right, so enough about Nvidia. Cash contribution, $30. So I have $30 available to invest. Reinvestment of Simon Properties. In reinvestment of ProLogis. These are all real estate investment trusts, Simon and ProLogis. I also received a dividend from HCA Healthcare. I did make an adjustment to have the dividends reinvestment once I noticed that there wasn't reinvestment. Let's see what else. Health Peak Properties reinvestment. There was a dividend and a dividend of Gilead Science. I did go and reprogram this to do reinvestment. And we see some dividends from some of the mutual funds I have. Also a reinvestment of Bank of America and reinvestment of, I sold Nvidia. Here we go. I sold the Nvidia, $37 worth, 37, 312, 312. I just decided to pull off some of that money because it would really hurt my feelings if I woke up one morning and all those profits were gone. And I purchased some more Fidelity 500 index fund. You can't get greedy when it comes to profits. You can go to the About section of my YouTube channel to learn more about where I am on social media. Remember to like, subscribe, and share, and click the all notification bell.